Another video review. Today is Tuesday, April 16th, 2024. Let's find out what's going on the Forex economic calendar. Bunch of the data from China were published overnight, so let's just take a look what's going on here. The most important one was GDP from China. GDP from China beats the expectations of 4.8% with the actual number of 5.3%, which is better than the previous number of 5.2%. Fixed asset investment beats the expectations as well, 4.5%. Chinese industrial production beats the expectations of 6% with the actual number 6.1%. And the Chinese year-to-date GDP beats the expectations of 5% with the actual number of 5.3%. Industrial production dives lower, down from 7% to 4.5%, which is way below the expectation of 6%. Unemployment rate still 5.2%. So bunch of mixed data from the China as usual. So we should take a look at nice reaction on gold, for example. Now what's next? UK data, climate count change, average earning index, and the employment change together with the unemployment rate. Every single one is different. So unemployment rate is bigger than expected, 4%, and it's increasing from 3.9% to 4.2%. The same situation is with the climate count change. It increased from 4.1 thousand to 10.9 thousand in the UK. German ZEW current conditions and economic sentiment data are scheduled for release at 11 o'clock, together with the economic sentiment for the Eurozone and the trade balance for the Eurozone. Housing starts in Canada are scheduled for release at 2:15, and then 15 minutes later, building permits from the US together with the housing starts are expected to be released. Core CPI and CPI data from the Canada is scheduled for release at 2:30. Industrial production from the US is scheduled for release at 3:15. Global Daily Trade Price Index from the New Zealand is scheduled for release at 4 o'clock. And 30 minutes later, we got German BUA President Joachim Nagel to give a speech. At 6:30, we got speech from the FOMC member Williams. Then we got Atlanta Fed GDP now, 7:15, together with the Bank of Canada Governor McClellan, who will give a speech as well, and the event of the day from the Fed. The speech from the Jerome Powell, the Fed chair, scheduled for release at 7:15. We are going to end this day with the API weekly crude oil stock at 10:30. So the first one we are going to take a look will be, of course, the euro dollar, and then maybe we'll do some analysis of the gold and the US dollar index. Euro dollar is deteriorating even lower after the breakout below it used to be demand zone, now it's the supply zone, located between the levels 1.0697 or 1.0670. Local low was made at 1.0603, and we are deeply oversold both on daily and 4 hour time frame interval as well. Yes, I'm just looking at the situation with the moving averages. We got the bearish cross here, 50 periods moving average is down, 100 periods moving average is down. There was a test of the lower technical resistance, 1.0665. It was rejected, bearish engulfing, and then down we go, despite the fact that the market conditions are extremely oversold. So where is the next target? Well, apparently, if we zoom out and zoom out and zoom out, let me just go to daily, because that will be better, because we are looking for another technical support. As I said, the next technical support is here. Those are support from the October 2023, and those levels are located at 1.0550, 1.0523, then eventually 1.0496, and the mother of all technical supports from 2023 is located at 1.0449. Any breakout below this level will means we have a new low in 2024 on euro dollar. Please notice that the market is actually roughly something like 155 pips from this level. It's not not that far away, guys. So despite the fact that we are trading inside the extremely oversold conditions on daily and 4-hour time frame chart, the bearish pressure is still strong on the euro to dollar. Let's then find out what is the US dollar index doing. Maybe gold first. Let's do the gold. Sorry, let's do the gold first. Okay, spot gold market, new all-time high. New all-time high was made at 2,430. Then we got this a little bit of the sell-off, and then we moved back up again. Please notice the fact, since the low of the 14th February, located roughly around 1,983, there is 90% of the green candles here, and the overall movement to the upside. Let me just take my tool so I can be precise with this. The tool is here. So the price range of this movement to the upside is roughly around 22%. Right, so in roughly about no more than 2 months, pretty decent result for the gold. Bullish market. This is very interesting candle because we haven't seen this kind of a spread for a long time on a daily. Then we have the pullback to the upside. Now we are consolidating the results around the level of 2,370, 2,380, right? So we got this level here, technical resistance and all-time high. We all know that the market is trending above 50 and 100 periods moving average. Quite interesting candle here. I will mark it with my arrows to focus your attention on this situation here. So any breakout below this level here basically would be bearish in a short term, 2,318. Momentum on a daily time frame chart extremely overbought for many days. Now we're coming down towards the level of 70, and 70 is still overbought, which means this is trending market, strongly trending market to the upside. So that's the outlook for the gold. Slight pullback, then resumption of the uptrend. If the gold is going up, what is US dollar index doing? US dollar index is going up, gold is going up, and stock markets, as you'll see in a minute, is going down. Very interesting situation. Stock markets down, US dollar up, no problem, but gold up and US dollar up, that's something sketchy. But gold up and SP 500 down, absolutely good correlation. So we hit 106.13, no, 41. That's the level. We broke above this level here, 105.98, without any problems. This is daily, remember, this is daily time frame chart, so that's the technical support. Market conditions on daily are extremely overbought, which means that traders should be prepared for the local pullbacks. All right, and now on the US dollar index, we are heading towards two significant levels, 107.06, and the other one is of course the high from the 2023, 107.32. Okay, that's the zone. And let's just take a look at the S&P 500. S&P 500 is S&PX, and it's supposed to go down. Yes, it's going down. This is the 50 periods moving average. We made a local high and quite, to be honest, all-time high, 5,274. So that's the technical resistance now. A, B, and C to the downside, but the range of the downside movement, let me just take my tool, is now more than 5%. No, the recent, there you go, 4.30. So it's not that bad on a daily. But please notice the fact that we've been moving around this extremely overbought conditions for quite some time, for the whole 2024. and as the market was going up in the staircase, yeah, up, pullback, higher high, pullback, higher high, pullback, higher high, pullback, and then minus 4.3% correction happened down below the level of 50 on the RSI. Now we are narrowing 36. Everything looks good here for a hefty pullback. Then the market is ready to move higher. So S&P 500 down, gold up, US dollar index up. So yeah, US dollar index up, euro dollar down. Everything is now very, very technical, and the market correlations are on the highest possible efficiency levels. So please watch this kind of market movements right now. Please keep an eye on the correlation. It looks like the markets are finally technical, very, very technical. So you can have the additional insights into the market scenario and your analysis during this very exciting time. Thank you very much for watching this analysis. I hope I see you guys tomorrow. Take care. Bye bye.